Hey, folks, good afternoon. Thanks for tuning in to our MMG weekly recap. So here we are on a Thursday, and rates continue to grind higher, although we did get a little bit of relief middle of this week. And folks, it's all about the Fed, and it's all about the shades of 2018. How much can the Fed do? And I think when you look at the pricing, the mortgage-backed security pricing losses we've endured over the last couple of weeks, and it really actually started when the Fed flip-flopped and went from inflation as transitory to we should retire the word transitory, and that set the ball in motion. But next week's the Fed, and we shall find out if they can be as hawkish as they're talking. Right there, there's a certain talk, there's a certain forecast within the markets that they're going to hike rates as many as 4 times, maybe reduce the balance sheet. That's a lot of tough talk, and it's one thing to say it, it's another thing to do it. And as you look around the globe, you're seeing ECB President Lagarde say, we're not stopping the bond buying and we're not raising rates. Inflation is going to moderate. China just yesterday, overnight, I should say, injected more liquidity, right? They cut rates. So while central banks around the globe are doing virtually the opposite of what our Fed is trying to do, next week is really interesting. The bond market is clearly trying to find a bounce, and I think it all points to what happens next week. Now, in addition to next week, we also have the Fed's favored gauge of inflation, the core PCE number. And this is what it's all about. It's about the Fed and inflation, and how many rate hikes can the Fed do without breaking the back of the economy. Here at Mortgage Market Guide, we don't think the Fed can be nearly as aggressive because the underpinnings of the economy aren't nearly as robust as some are saying. Consumer sentiment is at a 10-year low. You look at some of the other recent figures; they're soft on the growth side, and so I think if you got to be careful with the policy moves. But for right now, managing your pipeline, these are tough waters for us, and you have to remind your clients that the backdrop is like 2018, where we had a hawkish Fed, the desire to hike rates a bunch of times, and also the desire to normalize or shrink their balance sheet, which means quantitative tightening as opposed to easing. So I hope this finds you well. Have a great weekend, and we'll talk to you soon. Bye for now.